We're looking at the top 6 uranium exposed companies on the ASX over the last month. I'm Christopher Hall, and this is Finder Market Points, where we connect the leading market themes and top performing companies for better trading. Having a look at any commodity on the ASX and as a leading theme, we want to look at the commodity itself to understand how it's moving, because that is the most likely to be the driving force behind a good, strong, positive movement for a group of commodity or mining shares. Having a look at Sprot's physical uranium ETF, we can see that the price has actually fallen in the last month. So from throughout June into the start of July, it's come back, and this is showing sitting on the 50-day moving average being the green line. That's probably not the cause for a lot of the rallies. But if we have a look at the Sprott ETF uranium miner, we're going to see that it's flicked up in the last 3 days. So still a downward move throughout the most of June, but up 3 days in the most recent ones. If we're looking at this ETF, we want to understand which companies make up, or which companies this ETF is comprised of. We go to the list and we see that there's a fair bit of from a geography's perspective. Most of them are in the United States or Canada. So there's large allocations to Canada, and then Australia's second largest allocation from uranium mining perspective. Within those companies, we're then looking to see where are the Australians. We're going to find some very familiar names. We've got Paladin, Boss Energy, Deep Yellow, Lotus, Bannerman, Peninsula, Aurora, Alligator, and Elevate Uranium, then Toro a little bit further down. They are in this ETF that we can see is flicked up in the last 3 or 4 days. But their weightings are not as big as we see in Canada. So when we look at this ETF, we're not just looking at the Australian miners, we're seeing what's happening across the globe. That takes us into understanding the performances over the last 2 or 3 years. Good movement. June 20 all the way up to 21, September 21. We covered it a lot. We did a lot of breakdowns of the leading themes at the time, lots of high and tight flags and massive trading opportunities. Since then, volatile, but slowly been working its way down in a less volatile manner. However, congesting here and possibly turning the corner, time will tell. The junior uranium miners is a more recent ETF, and that has flicked up in a similar fashion in the last 3 or 4 days. So that's telling us there's a greater interest happening in the mining companies or the equities than there is in the spot price. And if you remember our video from last month, we talked about the importance of looking at the term market as opposed to the spot price for understanding the uranium miners and how that whole theme moves, which is notably different to pretty much any other commodity on the market. Looking at the top 6, we'll start off at Okapi Resources. They are uranium exposed, but we can see here low liquidity trawling across the bottom. Yes, they did flick up the last couple of days, but a difficult one to trade. LAM gets even harder to trade, which is Lamerade Resources, up 12%, both of them for the last month. EPM coming in, we see that at 4th place, and we can see the returns have been 13% for the month. A little bit more trading volume, a bit more volume coming in the month of June, which is positive to see. Maybe it's had a washout low and then turned the corner. Good to see. This happened at the start of June. They started rising well and truly before the rest of the miners and ETFs. So this can be a standout performer. Then we look at Bannerman Resources being the next best one. 3 days up, that's good and strong. They did pull it back throughout most of June, but a stronger flick up throughout late May, early June. That's positive to see and brings it up to the 200-day moving average, that red line to test, throwing back but staying above the 50. Then we're into the top 2. Moab Minerals, 26% gain for the month. More of a recent listing, reverse entry into the ASX, trawled out a bottom after that entry. Volume has been really positive. Look at this good, strong volume throughout June, spiking and then pushing up over overhead resistance, and what we like to see, while crossing the 200-day moving average. We're about to get the golden cross with the 50-day moving average getting above the 200. Finally, first place, Berkeley Energia, BKY. We can see they've jumped up. So February, March, April, May, bit of a churn sideways, getting less volatile, and volume sort of drying up, but some good, decent days in there. We see late May get a huge jump up, good volume, pushes up, throws back a little bit, but maintains most of that window, most of that rise, turns the corner and starts moving 44 cents towards 64 cents. Massive positive movement, while the rest of the uranium miners aren't moving as much. Definitely a standout performer. What's an even greater highlight is when we look at the news. We've got news from January, February, March, April, May and June in about 7 to 8 articles. What we're seeing is a notice of the general meeting in the proxy forms, the most recent announcement on the 19th of June, and nothing of that until the month of May. So a lot of investors are scratching their heads to say, why is it that BKY is running so strong? Harder and faster than other uranium miners and a lot faster than uranium miners around the globe. And the commodity price isn't driving it either. It's not news and publicly available news, so that's a real question from investors. I'm Christopher Hall. These are the top 6 uranium miners over the last month on the ASX, and this is Finer Market Points.